All right, so we got a request to do a deep dive on the latest from TechLead. And, looking at things, he paints a pretty interesting picture of the markets right now.
Yeah, it's definitely a mixed bag out there.
For sure, like when you see Bitcoin and Ethereum both down,
Mm-hmm.
that's usually a sign that, things aren't exactly rosy.
Right, and it's not just crypto either. The tech sector as a whole is having a rough year so far.
Yeah, it really is. Almost all the big names are in the red year to date. I mean, we're talking Google, Facebook, Tesla, Microsoft, Apple.
The S&P 500, even NVDA.
It's pretty broad-based.
It really is, and what's striking is that gold is the only asset that seems to be up this year.
Yeah, like it's almost like people are, heading for the exits and just looking for the safest place to park their money.
Yeah, that classic flight to safety when things start to feel shaky.
Right. And that's what makes this TechLead video so fascinating because he really dives into some of those underlying forces that might be driving these shifts.
Yeah, he doesn't hold back.
Not at all. Like he even throws out there that the age of making money is over.
Wow.
And he's got some thoughts on, potential economic contraction, even technical stagnation. So yeah, there's a lot to unpack here.
Definitely. Let's start with the AI angle, because that's something he really hones in on.
Yeah, and I mean, right off the bat, he doesn't mince words, calling some of what's out there, garbage AI slop.
So what did you make of that assessment?
Well, it definitely gets your attention, right? Like the guy's not afraid to use some strong language.
Right.
But I think what he's getting at is that all this hype around AI, it's not necessarily translating into real tangible benefits or applications just yet.
Yeah, and then you have Replit saying that AI is going to be writing code so well that basically learning to code is going to be a waste of time.
I mean, that's a pretty huge statement, right?
Yes.
Like if that actually comes to pass, it's going to have a massive impact on anyone in the tech field.
No doubt. It makes you wonder how AI is going to reshape whole industries and like what skills will be relevant.
It's that classic automation fear, but on a whole other level.
Right. Like, are we all going to be out of jobs?
Well, I don't know about that. But it definitely raises some big questions about the future of work.
Totally. And then you have someone like Tsai, the chairman of Alibaba Group, who is just blown away by the amount of money being poured into AI data centers.
He threw out a figure of like $500 billion.
And he's basically saying it's way ahead of actual demand.
Yeah, coming from someone like him who's right at the forefront of the tech world, that's pretty significant.
It really is. Like, are we getting caught up in the hype? Is this another bubble in the making?
And Ray Dalio even makes the comparison to the dot-com bubble back in the early 2000s.
Right. Just because something is transformative or groundbreaking doesn't guarantee investment success.
There were a lot of companies back then that went bust despite the internet being this revolutionary new thing.
Exactly. It's about viable business models, mass adoption, realistic valuations, not just the excitement of a new technology.
And then there's Q Lee, formerly with Google AI, who pointed out the stark difference in operating costs between OpenAI and a company called DeepSeek.
What was that, like $7 billion for OpenAI versus a fraction of that for DeepSeek?
Something like 2%. So it raises this question of sustainability. Like, can OpenAI really justify those costs?
Especially if others are achieving similar results with far less overhead.
Right. It's definitely a point to consider when you're evaluating the AI landscape.
For sure.
So let's switch gears a bit and talk about Bitcoin, because the video revisits this idea of Bitcoin being a decent asset preservation strategy. But it also acknowledges that gold has actually outperformed Bitcoin so far this year.
It's interesting, right? Because gold is like the old school safe haven.
Exactly. Like when there's uncertainty, people tend to flock to gold.
It's tangible. It's been around forever.
And I guess in the current climate, that sense of security is really appealing.
But the video still makes the case for Bitcoin potentially surpassing gold eventually.
Yeah, appealing to the digital natives, right?
Yeah.
The millennials who are more comfortable with digital assets.
And that whole narrative of Bitcoin being freedom money, uncensored, permissionless, borderless.
It's a powerful idea, especially for people in regions with financial instability or concerns about censorship.
Absolutely. But then you have the other side of the coin.
Literally.
With the East, like the BRICS nations seeming to prefer gold.
Yeah, they see it as censored, permissioned, capital controlled.
And there were even those rumors of China and Russia using gold for payments to get around sanctions and tariffs.
So it's a completely different perspective on gold's role.
It highlights the geopolitical aspects of all this.
Right. Like if you're trying to reduce reliance on Western financial systems, gold offers that alternative.
But then gold has its limitations too, right? Especially in a digital world.
Exactly. Like Try moving large amounts of physical gold across borders. It's not exactly practical.
Compared to Bitcoin, which can be transferred globally with a few clicks.
And the video really emphasizes that point about Bitcoin's portability and usability being a huge advantage in places with tight capital controls.
It's like that example they gave of someone in a restrictive country using Bitcoin to buy property in a more open market.
It just wouldn't be feasible with gold.
Exactly.
So before we go any further, a quick mention of the Bitcoin 2025 conference coming up in Vegas.
Oh, yeah.
It's at the end of May, and they've got some big names speaking. Michael Saylor, Senator Cynthia Lummis, Adam Back.
It's like a big gathering of the Bitcoin community.
Yeah, lots of educational sessions, networking events,
Yeah.
social gatherings.
They're calling it an immersive experience.
Definitely sounds like the place to be if you're deep in the Bitcoin world.
For sure.
All right, so now onto something I found really interesting, this idea that Bitcoin's hash rate can be a predictor of its price.
Okay, yeah. The hash rate being the total computing power securing the network.
Right, so the higher the hash rate, the stronger and more secure the network is.
And the theory is that this strength should eventually be reflected in the price.
Right, but the video points out that there's this divergence happening right now between the hash rate and the price across different time frames.
And historically, when you see that the price tends to catch up.
Exactly. So based on this analysis, they suggest a potential future price target for Bitcoin somewhere between 100,000 and 105,000.
It's a compelling idea,
Yeah.
but of course you have to remember that no single metric is a perfect predictor.
Of course, market sentiment, external factors, all that can play a role.
Definitely.
So let's talk about this BTC ETH trading strategy that the video highlights.
Oh yeah, the long Bitcoin short Ethereum play,
And apparently it's been absolutely crushing it this year.
outperforming both Bitcoin and Ethereum individually.
By a lot. Like, we're talking significant gains.
So what's the logic behind this trade?
Well, essentially, it's about isolating Bitcoin's strength relative to Ethereum.
You're betting that Bitcoin will do better than Ethereum regardless of what the broader market does.
Right. So you're kind of hedging out the overall market risk.
And the thinking is that this gives you a cleaner signal of Bitcoin's underlying strength.
And it seems to be working because even in the last few days, while Bitcoin and Ethereum have been down, this BTC ETH trade has stayed positive.
Wow. It's really showing that Bitcoin alpha.
Yeah, like it's outperforming even within the crypto market itself.
Which leads to that discussion about the weakening narrative for Ethereum.
Right, this idea of Ethereum being the silver to Bitcoin's gold.
It seems like that's lost some momentum since the merge back in September 22.
There's also the fact that the Ethereum Foundation has been consistently selling Ethereum.
And not a lot of institutional accumulation happening either.
Yeah, it does make you wonder if the market is starting to view Ethereum differently.
Definitely. And the point about people moving away from Ethereum wallets because it's too complex.
And the gas fees being increasingly covered through other means like USDC conversion.
It all suggests that the Ethereum token itself might be becoming less essential for the average user.
Right, like if people can interact with decentralized apps and use stablecoins without needing ETH directly.
It kind of undermines the fundamental demand for the token.
And then there's the argument that Ethereum's value lies in its infrastructure.
Which is true to a point.
Yeah.
But the video makes this analogy to water and utility companies.
It's like, yeah, water is essential, but that doesn't mean the utility company's stock is going to skyrocket.
It's about more than just utility. There has to be demand for the underlying asset.
And then there's this concept of the BTC ETH ratio being an indicator of exit retail liquidity.
Meaning that if Ethereum rallies before Bitcoin, it's probably just a fake rally driven by retail investors.
Because real bull runs tend to be led by Bitcoin.
It's like Bitcoin is the bellwether for the whole crypto market.
So moving on to the bigger picture, the video talks about the possibility of a sideways market for the rest of the year.
Yeah, pointing to things like Trump's tariffs and the trend of deglobalization.
This idea of a shrinking world.
Right, and when you have those kinds of geopolitical and trade tensions, it creates a lot of uncertainty in the markets.
And tariffs can really disrupt things, increasing costs, potentially slowing down economic growth.
It all adds up to a less than ideal environment for investment.
And the video is pretty blunt about the limitations of tariffs.
Like you can't just force skills or work ethic through policy.
Right, and they bring up the continued reliance on H-1B visas for manufacturing in the U.S.
It shows that there are deeper economic and societal issues at play.
And then there's this cultural observation about the new American dream.
That focus on quick wealth through crypto influencers, meme coins.
It's like a whole shift in aspirations.
Maybe a reflection of the challenges of achieving financial stability through more traditional means.
And then this idea that the current economic slowdown has been manufactured through tariffs and interest rate hikes.
But that there are tools available to reverse course if things get too bad.
Like lowering tariffs, dropping rates, even printing more money.
It's a controversial viewpoint, but it raises interesting questions about the role of policy in shaping the economy.
Absolutely. So finally, the video talks about what might be needed to trigger a real Bitcoin bull run. And they emphasize the importance of a strong economy with capital flowing in.
But then they make this distinction between GDP and GNI.
Right. So GDP being gross domestic product, which measures overall economic activity.
But GNI, gross national income, is more about the total income earned by a nation's residents.
And the argument is that GNI is a better indicator of whether people actually have more money to invest in things like Bitcoin.
It's about wealth creation, not just economic activity.
Exactly, like building a bridge to nowhere might boost GDP, but it doesn't necessarily make the country richer.
Right, or creating another addictive mobile game.
It's all about the quality of that economic growth.
So what they're saying is that either a really positive growing economy, as measured by GNI, or mass retail adoption, is needed for Bitcoin to really take off.
All right, so to wrap up the key takeaways from this deep dive, we've got concerns about an AI bubble, the dynamic between Bitcoin and gold, the potential of this BTC ETH trade, a weakening narrative for Ethereum, and a whole host of macroeconomic factors to consider.
It's a lot to digest.
It is, but it gives you a really good sense of the forces shaping the market right now.
Definitely a reminder to look beyond the hype and focus on those fundamentals.
So I'm curious, what do you think about this idea of GNI being a better measure of economic health?
It's interesting, right? It makes you think about what kinds of activities really lead to long-term wealth creation.
And what might fuel the next wave of innovation or drive asset appreciation?
It's a big question.
It is. Well, hopefully this deep dive has given you some food for thought.
For sure.
And a better understanding of what's going on out there in the market. So as always, stay informed, stay curious, and we'll see you next time.
See ya.